Hey everyone, pull up a chair, grab your favorite drink, coffee, tea, whatever keeps you sharp, because what I'm about to lay out for you isn't just some wild conspiracy from a late-night podcast. It's the cold, hard mechanics of how the world's biggest economy is about to pull off the greatest financial magic trick in history. And guess what? You're the audience and the mark. Picture this. The United States government right now owes a jaw-dropping $37 trillion. Yeah, you read that right. $37,000. To put that monster number in perspective, if every single American chipped in $100,000 each, that's a ton of cash for most folks. It still wouldn't cover it. Or think of it like this. If you won the lottery every day for 1,000,000 years and blew the whole jackpot each time, you'd barely scratch the surface. This debt didn't sneak up overnight. It's been building for decades. Wars, bailouts, pandemics, you name it. Back in the 1980s, the total U.S. debt was only about $3 trillion. Fast forward to today, and it's exploded 12-fold. And here's the kicker that keeps me up at night. Nobody in Washington, from the president to Congress to the Fed, is seriously planning to pay it back like you or I would. No massive tax hikes on the ultra-rich, that'd be political suicide. No slashing entitlements like Social Security or Medicare, voters would riot. No magical economic boom that grows us out of it, growth is sluggish at best. So what's the play? They're gonna make it vanish, not with a bang, but with a whisper. Through something called devaluation, a fancy word for quietly draining the life out of every dollar you hold, save, or earn. It's like inflation on steroids, but dressed up as smart policy. And the secret sauce? The very assets you've been told to buy for protection, gold and Bitcoin. I know what you're thinking. Wait, isn't gold and Bitcoin supposed to be my shield against a crashing dollar? That's what the gurus sell you on TikTok and in those glossy finance books. But flip the script. What if the government is stacking those same assets to use as a wrecking ball against your cash? Stick with me, because by the end of this, you'll see the full picture, the history repeating itself, and most importantly, a dead simple plan to flip the odds in your favor before it's too late. Let's rewind the tape to understand the blueprint. This isn't new. Governments have been pulling this rabbit out of the hat routine for centuries. But the US version in 1933, that's the masterclass everyone's ignoring today. It was the heart of the Great Depression. Stock market crash of '29 had wiped out fortunes. Unemployment hit 25%. Bread lines stretched for blocks. The government's debt-to-GDP ratio, a key health check, was pushing 40%. And deflation, prices falling, money getting stronger, was making debts feel even heavier. People hoarded cash because it bought more tomorrow than today. But for the government, that was poison. Their bills were fixed in dollars, but revenues were tanking. Enter Franklin D. Roosevelt, freshly elected in '33. He didn't mess around. On April 5th, he drops Executive Order 6102. All persons are required to deliver on or before May 1, 1933, to a Federal Reserve Bank, all gold coin, gold bullion, and gold certificates now owned by them. Penalty for hiding it? Up to 10 years in prison or a $10,000 fine, a fortune back then. Why? The official line was to stop hoarding that was worsening deflation. But the real game? Control the gold supply. Americans grumbled but mostly complied. Over 600 tons flowed into government vaults. The feds paid folks 20.67 cents per ounce, the official price since 1900. It felt fair at the time. Then boom. January 30th, 1934. Roosevelt signs the Gold Reserve Act. Overnight, the official price jumps to $35 per ounce. A 69% hike. No new gold mined, no magic discovered, just a presidential pen stroke redefining value on the government's balance sheet. What did that do? The U.S. Treasury now owned that confiscated gold at the new price. Their reserves, valued at about $4 billion pre-Revel, ballooned to $6.8 billion. Poof, $2.8 billion in fresh wealth from nowhere. They used it to back new currency issuance, fund recovery programs, and ease the debt load. Debt to GDP dropped from 40% to around 25% in 5 years as inflation kicked in. Prices rose 45% by 1940. But who paid the bill? You guessed it. The everyday Americans left holding devalued dollars. That 20.67 they got for their gold now bought 40% less stuff as inflation eroded purchasing power. Folks who'd saved in cash saw their nest eggs shrink in real terms. Bonds? Crushed. Wages? Lagged behind. The government transferred wealth from savers to itself, all legal, all for the greater good, and most people, they blamed the banks or the weather, not the revaluation sleight of hand. Sound familiar? That's because it's the exact same playbook, supercharged for the 21st century. Today's US debt to GDP is 132% worse than post-WW2 levels. Annual interest payments alone, $1.2 trillion, and climbing. At 5% rates, that's headed to $1.8 trillion by 2027, more than the entire defense budget. Unsustainable? Understatement of the century. The Congressional Budget Office's own projections scream it. No combo of taxes, cuts, or growth fixes this without a reset. Enter the modern twist, a parallel strategy using gold, the old reliable, and Bitcoin, the digital disruptor. They're not just holding these, they're positioning to revalue them massively, creating trillions in balance sheet magic while your dollars bleed out. Start with gold. The US holds 8,133 metric tons in Fort Knox and other vaults, the world's largest stash. Market price today? About $2,800 per ounce, totaling $731 billion. But on the official books? Stuck at 42.2220 ceps per ounce. That undervalues it to a measly $11 billion. Why leave it there? Headroom for the big lift. Imagine the announcement. To strengthen national reserves amid global uncertainty, we're revaluing strategic gold holdings to $20,000 per ounce. Why 20K? Math. At that price, the same 261 million ounces become 5.2 trillion overnight. From 11 billion to 5.2 trillion. That's 5.19 trillion conjured from an accounting entry. Balance sheet looks golden. Pun intended. Debt ratios improve on paper. Bond markets calm. Crisis averted? Sort of. Now Bitcoin, the wildcard upgrade. The government already sits on 210,000 BTC from busts like Silk Road and ransomware gangs. At 100K/BTC, that's $21 billion. Not chump change, but peanuts for 37T debt. Q January 23, 2025. President Trump inks the executive order for a strategic Bitcoin reserve. Modeled after the Strategic Petroleum Reserve, it mandates building a national stockpile of digital assets. Public spin? America won't cede crypto leadership to China or Russia. This protects innovation and jobs. Noble, right? Behind closed doors? It's a quiet acquisition machine. Target, 1 million BTC over 5 years. How? Not dumb open market buys that spike prices to the moon and cost a fortune. Instead, seize more from dark web ops and tax dodgers. They grab thousands yearly already. Accept BTC and plea deals and fines from crypto firms. Even explore government-backed mining using cheap federal land and energy. All under the radar. No headlines, no fanfare. Fast forward to announcement day, say 2028. The US Strategic Bitcoin Reserve now holds 1 million BTC, valued for official purposes at $1 million per coin. Acquired at an average 120K each, $120 billion total cost, it flips to $1 trillion. Another trillion from thin air. Add 'em up. 522T from gold plus $1 from BTC, $6.2 trillion in new assets. That's 17% of the debt wiped clean on the books. Debt to GDP drops 20 points. Interest payments manageable. Wall Street toasts. But the real cost? Buried in the fine print. When the world's reserve currency issuer declares gold at 20K/Oz and BTC at 1M, markets don't ignore it. Gold starts at 5K, 10K, races to 18K plus. BTC blasts 300K, eyes 1M. Why? The US sets the floor. Their buying power and policy muscle make it self-fulfilling. Central banks worldwide follow suit, piling in. And the dollar. It tanks in tandem. If a useless digital coin like BTC is suddenly $1 million, what does that say about the greenback? Purchasing power plummets 50 to 70% over 3 to 5 years. Your $1,000 grocery run becomes $1,800. Gas? Doubles. Rent? Skyrockets. Salaries adjust, eventually, but wages always lag. Pensions tied to bonds? Evaporate in real terms. Savings accounts? A joke inflation chews 10–15% annually. It's theft by inflation, but elegant. No bank runs, no riots, just a slow boil. Media calls it asset boom and digital revolution. Economists nod at prudent reserve management. You're left wondering why everything costs more while your paycheck feels lighter. Let's make this personal. Say you're 35, with 50K in a 401K, mostly bonds and cash equivalents, 20K emergency fund, and a 300K mortgage. Post-reval, your retirement buys 40% less, down to 30K real value. That emergency pot covers 3 months instead of 6. Mortgage payments? Fixed, but everything else doubles, so you're treading water harder. Meanwhile, the guy who bought 1 oz gold yearly since 2015, his stack's now worth 7x more in dollar terms, but 20x in purchasing power. Or take Sarah, a teacher in Ohio. She saves diligently in CDs at 4% interest. Sounds smart, right? Wrong. Inflation hits 12% post-reval. Her safe money loses 8% yearly. In 5 years, that nest egg halves. Her students, same story. College funds gutted. This isn't doom porn, it's pattern recognition. History's littered with resets. Rome debased coins with cheaper metals, inflating away debts while citizens starved. France in the 1790s printed assignats backed by confiscated land. Hyperinflation followed, guillotines sharpened. Weimar Germany 1923. Wheelbarrows of marks for bread. Zimbabwe 2008, 89 sextillion% inflation. Venezuela today, Bolivar toilet paper. The US is smarter, gradual, globalized. 1971's Nixon shock ended gold convertibility, letting the dollar float and debt balloon. Result? 600% inflation since, eroding savers. Now with BTC as the new lever, it's turbocharged. Timeline. No crystal ball, but signals scream 3-8 years. 2025-27, quiet stacking, more seizures, policy tweaks. 2028, trigger event, recession. Geopolitical flare-up, announcement hits. 2029-33, assets moon, dollar dives. By 2035, debt solved on paper, but your cost of living up 2-3x. Who's hit hardest? Wage earners, retirees, fixed income folks, winners? Early asset holders, hedge funds long gold/BTC since 2020, insiders tipped off. Governments too. Cheaper debt refinancing and weak dollars. So enough gloom. What's the escape hatch? Knowledge is step 1. Action is the rest. You don't need a finance degree or millions to play defense. Here's a no BS step-by-step plan for the average person. Adapt it to your life. Step 1. Audit your money. Do this today. 1 hour max. List everything. Bank balances, investments, debts, monthly expenses, tools, free apps like Mint, or a simple spreadsheet. Goal. Spot the weak spots. Too much in cash, bonds. Losers in inflation. Not enough in hard assets. Fix it. Step 2. Build your cash buffer smartly. Next 30 days. Keep 3 to 6 months expenses liquid but not all in one bank. Split. Half checking, half high-yield savings. Aim 4 to 5% now. Why? Emergencies happen but cash rots long-term. Pro tip, use I-bonds, inflation-protected U.S. savings bonds for part of it, up to 10K/year. Step 3. Ditch the dead weight. Pay off bad debt. Ongoing. Priority 1. High-interest stuff first. Credit cards. Average 20% APR. Payday loans, anything over 7%. Snowball or avalanche method. Pick one. Commit. Why? Debt's a hole. Inflation helps borrowers. Fixed payments buy less over time. But high-rate debt eats you alive now. Refi mortgages if rates drop. Step 4. Stack the winners. Gold and Bitcoin. Start small, scale up. This is your hedge core. Gold, buy physical 110-ounce coins or bars from reputable dealers. Abmex, JM Bullion. Start with 50 to 100/month. Store in a home safe or allocated vault, not paper ETFs. They can be frozen like 1933. Goal, 5 to 10% of net worth. Why physical? You control it. Bitcoin. Dollar cost average 25 to 200/month via apps like Swan or River, low fees. Self-custody. Hardware wallet, Ledger Nano, $60. No exchanges, hacks happen. Learn basics. Seed phrase, multi-sig for bigger stacks. Aim 1 to 5% portfolio. Why BTC? Scarce 21M cap. Portable. Government can't print more. Mix 60% gold. Stability. 40% BTC. Upside. Rebalance yearly. Step 5. Level up real assets. 6-12 months out. Real estate, pay down your home aggressively. Extra $200 a month shaves years off. Can't buy? REITs or crowdfunded deals. Fund rise, $500, rents rise with inflation. Commodities/skills. Side hustle in trades, plumbing, coding, always needed. Or farmland via acre trader if you're bold. Step 6. Protect the family. Talk it out now. Spouse kids meeting. Explain simply. Money's changing. We're building a safety net. Joint accounts for gold BTC buys. Wills updated. Crypto inheritance clause. Kids 529s. Shift to inflation hedges. Step 7. Stay informed. Stay sane. Daily habit. Follow signals. Fed minutes. Executive orders. BTC's gold price action. Sources. Zero Hedge, Edgy. Lynn Alden, Smart Breakdowns. X accounts like @CynthioAmistPolicy. Avoid panic. Diversify emotions too. Exercise. Community. Wealth's pointless without health. Real talk. This isn't get rich quick. If you start with $200 a month into gold/BTC, at 20% average annual returns conservative for these, it's $25K in 5 years. Post-revol, that buys a car or down payment. Life changer. The 1933 holdouts who smuggled gold abroad, they thrived while others suffered. Objections. Too risky. Nah. Cash is the real gamble now. I can't afford it. Start micro. $10 BTC buys. Government will ban it. They tried with gold. People adapted. BTC's decentralized harder nut. Bottom line, the reset's coming. 37 trillion doesn't pay itself. Gold to 20K, BTC to 1M, dollars to kindling. But you're not helpless. You're early. Act now, and this theft becomes your windfall. 2 paths ahead. The sheep who wake up broke, muttering, "How did this happen?" Or the wolves who saw the storm, built the ark, and sail through richer. Your call. But the clock? It's ticking louder every day. If this hit home, smash like, subscribe. More breakdowns coming. Drop a comment. What's your first move, gold or BTC? Let's build together. Stay vigilant. Stack sats. Hug your gold. See you next time.